We're so very excited for this next session. CDFIs gain visibility as financial first responders. To kick off this session, I would like to introduce Michelle Thornhill. Michelle is the U.S. Director of Community Relations at Citi, where she oversees engagement with local community leaders and organizations in markets across the country to create more inclusive and prosperous neighborhoods. Michelle?
Thanks, Cathie. So pleased to join everyone today to hear from so many institutions who have taught us a great deal about expanding financial access and inclusion for individuals across the country, particularly in communities of color. At Citi, our mission is to serve as a trusted partner to our clients, responsibly providing financial services that enable growth and economic progress. But there's no way that just one institution can reach everyone. And that's okay, as long as we find partners that do. Financial institutions of all sizes are needed to serve a broad spectrum of customer and client needs. Community development financial institutions play a vital role in expanding access to safe and affordable products and services to low-income communities and communities of colors. And by partnering with mission-based entities like CDFIs and MDIs, institutions like Citi aim to combine scale with local market expertise, community knowledge, and often long-established relationships to serve important communities in a larger and more efficient way than banks of either size could do on their own. Which is why for many years, Citi has invested in seeding models that expand financial access for underserved African American, Hispanic, and immigrant communities by partnering with Inclusiv to support the ability of community development credit unions to reach and serve minority and immigrant communities. To bring that to life, let me highlight two of our partnerships with Inclusiv that some of you may be familiar with. The first builds more inclusive local economies by increasing the capacity of legacy African American credit unions to provide access to credit and financial services in low and moderate income communities. And that work has grown and evolved into Inclusiv's Black Communities Initiative. The second builds connections with Mexican consulates and Juntos Abismos, I don't speak Spanish, so I'm sure I butchered that, designated credit unions to create pathways for Spanish-speaking consumers. Today, the communities we collectively serve are facing a new and sobering economic reality. While we have yet to realize the lasting economic impacts of COVID-19, the immediate impacts are unquestionably and disproportionately falling to communities of color. And at Citi, we're not stepping back, but we're stepping up to meet current needs. The Citi Foundation launched a $7.5 million COVID-19 U.S. Small Business Relief Program in April to support efforts by CDFIs to serve small, diverse entrepreneurs who may not fully qualify for federal government stimulus funding. As the crisis has continued, we continue to expand that work. This plans to donate net profits from Citi's participation in the U.S. Small Business Administration's Paycheck Protection Program, or PPP. We're proud to say that $25 million in initial proceeds from PPP has been donated to the Citi Foundation. And through this effort, the Citi Foundation is deploying $15 million in unrestricted funding of up to $500,000 per CDFI to support small businesses owned by people of color and lower income individuals and communities. The remaining $10 million in PPP net profits deployed by the Citi Foundation to the Local Initiative Support Corporation, or LISC, to support the New York Forward Loan Fund, which is enabling CDFIs making loans to small businesses, nonprofits, and small landlords for working capital, including payroll, operating, and emergency maintenance. To help close the racial wealth and in the US, last month we announced City's Action for Racial Equity as a comprehensive approach to providing greater access to banking and credit in communities of color, increasing investment in Black-owned businesses, expanding homeownership among Black Americans, and advancing anti-racist practices in the financial services industry. These are examples of how together we can serve communities of color in larger and more effective ways than ever before to deliver value and opportunity for all. And finally, I'd like to mention one element of City's work that ties directly to today's plenary speaker, Jodie Harris. City's support of Inclusiv Puerto Rico CDFI initiative has given financial cooperatives in Puerto Rico the tools and capacity to pursue CDFI fund certification and resources to bolster economic revitalization efforts and on disaster rebuilding. Just a few years ago, there were CDFI fund certified financial cooperatives in Puerto Rico. Today, there are 37 that have received nearly $10 million in CDFI fund technical assistance and financial assistance. Work would have been possible without the CDFI fund led by Jodie, which has changed the charge in expanding access to economic growth opportunities. The U.S. Department of Treasury CDFI fund and Jodie's leadership are critically important in Puerto Rico and communities throughout the U.S. And so I am pleased to have the opportunity to introduce Jodie today. Jodie is the U.S. Department of Treasury CDFI Fund Director and has worked in both the public and private sectors for over 25 years. She joined the Treasury in 2007 and has served in a number of roles. Jodie has managed grant programs and developed legislative and policy proposals for a range of issues focusing on access to capital, community development, banking, and financial inclusion. Most recently, had a team of analysts to develop policies and programs to support community and economic development nationwide. Jodie, we can't thank you enough for your commitment to financial inclusion and look forward to your continued leadership to our communities of color with access to responsible and simple asset building tools. And so without further ado, please join me in welcoming Jodie Harris.
Thank you, Michelle, for that great introduction. And thank you, Pablo, Cathie, the Inclusiv community for inviting me to participate in today's virtual conference. I'm excited that Inclusiv made this work, given everything that's going on. So it is always great to listen in and hear what CDFIs are doing and facing, and always great to hear from folks like Michelle, who are talking about the reach and the impact of partnerships and how our larger financial institutions can support our community-based credit unions to really reach the markets and the people who are cut out from the traditional banking system, but really need access to safe and affordable capital and credit. So thank you all for the time here today. Given what's going on around us, I thought it would be great just to talk about the CDFI fund and credit union impact. There's a lot of good work happening that, even though we're talking about solutions and talking about issues related to those solutions, it is a good time to highlight and celebrate the impact that credit unions are having in our community. Just by way of context, the CDFI fund has been at this for 26 years, and we have provided more than $3.9 billion through monetary award programs. We've allocated $61 billion in tax credits and we've guaranteed more than $1.7 billion in bonds through our bond guarantee program. But it's this last year, fiscal year 2020, where I think we were all just abruptly altered by what's happening with the pandemic and then the economic impact of that everyone shifted gears, and the community credit unions and the CDFI fund marshaled on to serve our communities. And so we did quite a bit of work in 2020, and I'm very pleased to share that in 2020, we made over $540 million in monetary awards and loans. We were able to commit to guarantee $100 million in bonds, and we allocated $3.5 billion in new market tax credits. So there's still capital flowing, and there's still the ability for credit unions to leverage these resources. As we're looking at the data, I'll highlight that the nationwide network of CDFIs continues to grow. There are over 1,100 CDFIs across the country. CDFI total assets are over $173 billion, and collectively, CDFIs have a total portfolio outstanding of $141 billion. CDFI credit unions play a strong and critical role in supporting the growth and the reach of the CDFI network. We looked at our last iteration of ACR data, annual certification reporting data, and we found that credit unions are nearly 30% of all certified CDFIs. Credit unions reported a total portfolio outstanding of $89.4 billion, or more than 63% of the CDFI industry's total portfolio. Credit unions also reported development services to more than 3.1 million customers, which is more than 62% of the deployment services provided by CDFIs across all types. I think that those numbers are significant and shows the commitment of CDFI credit unions to continuing to deploy products and services in their communities. I think it's also important to highlight, as Michelle touched in her remarks, the impact of credit unions in our CDFI program and NACA program. Just this past September, the CDFI Fund awarded 397 CDFIs over $204 million in awards. Of the CDFI program, which represents our financial assistance and our technical assistance, 108 credit unions received over $44.4 million in awards. This represents 1/3 of the award pool, as well as 1/3 of the applicant pool. So our institutional proportionality was reflected in our 2020 awards. The NACA program awarded 2 credit unions totaling more than $1.2 million, and that represented about 5% of the total awards, with applicants around 6% or so. So we're still reaching as many credit unions as possible based on the level of applications. We're proud to see that we've be able over the years to make sure that our institutional proportionality has worked out, and that it's an intentional decision to make sure that we award all highly qualified CDFIs the proportion of awards that we can. But I think the CDFI network, the community development credit unions in particular, need to be really proud of this ability to apply and receive these awards, because the award process really looks at your business plan and whom you're targeting, and to be able to demonstrate how the funds will be used. And your award, once you are able to demonstrate that, and the credit unions by far have shown their ability to demonstrate deployment of funds in communities that need it most. I'll now switch gears to talk a little bit about a future program that's coming up, which is a small dollar loan program. We received $5 million in our 2020 appropriations for the small dollar loan program, and we are set to launch that in early 2021. This program will allow CDFIs and those depository institutions such as credit unions who partner with CDFIs the ability to offer small dollar credit to customers and consumers across the nation. The award program will provide money for technical assistance, as well as provide money for loan loss reserves, which I think will be a beneficial and critical way to grow the number of small dollar loans that are provided. I'll also say that in looking at the ACR data that I mentioned at the top, the rise in consumer lending among CDFIs has grown over the years. And I do think, while I haven't run any regressions or any type of research model, I do think that that is connected to the rise in the growth of the CDFI credit unions. So the small dollar loan program will open. This is another opportunity to gain critical resources to expand your products and services. The last thing I'll touch on is certification. And I know this is a big topic for everyone, and we now have a request for public comment on our proposed certification application available in the Federal Register and on our website. The comments are due November 5th, next week, and we have received several comments from credit unions, so I appreciate all those that have come in, and I encourage you all to send more our way. Just for a refresher, in 2017, we initiated a review of the CDFI certification policies and procedures. And this review was to ensure that our practices continue to reflect and represent the evolving nature of CDFIs, as well as to safeguard government resources. As part of this process, we requested public input on various aspects of the CDFI certification. The proposed certification application and reporting forms account for that feedback and reflect the CDFI Fund's strategic priorities. In making these revisions, the CDFI Fund has maintained the following 5 policy objectives. We hope to continue and foster a diversity of CDFI types, activities, and geographies. We want to make sure that we support the growth and reach of CDFIs, especially as it relates to your ability to innovate and take advantage of new technology. We also want to protect the CDFI brand. Brand is not a word that we typically use in government speak, but we do believe that CDFIs, because of their mission-driven orientation and their commitment to community development, there is a brand out there that needs to be maintained and protected. We also want to minimize burden on CDFIs while improving the data quality and collection methods. And we also just want to promote efficiency for the CDFI Fund staff in rendering the CDFI certification determinations. So what you'll find on our website, you'll find the proposed application as well as a revised annual certification report and a new report, the certification level, transaction level report, that will be required of all CDFIs. And this serves a couple purposes, but it's mainly for us to be able to take a broad and complete snapshot of the CDFI industry. Some of the data that was previously reported through the ACR will now be moved into the new, as we call it, CTLR. And this will allow us to have CDFIs that have received awards and those who have not to share some of their information on the products and services that they offer. So we can then complete the picture of what the CDFI industry looks like. Particularly in my role, I get a lot of questions on capacity. I get a lot of questions about certified CDFIs. And right now, the data we have is mostly based on CDFI credit unions, banks, loan funds, venture capital funds that received awards. And it would be great to show the impact of the collective 1,100 CDFIs across the country. And right now, we don't have the full capacity to do that. I've been able to read over a couple letters that we've received from credit unions, and I will say your points are well taken and well articulated, and I appreciate the specificity that you've provided, and I do hope we receive more letters such as the ones we've received. We've taken note of the issue around burden on data collection. We have been talking internally about this for some time, not just with the certification application, but we have acknowledged the fact that you all do so many transactions and that putting them through a rigorous data collection every year may not be as efficient as it could be. And so we are thinking about solutions for that. We've looked at the comments related to product design and question and some of the questions we received about the primary mission. And so the only way that we can be able to incorporate changes in the next iteration of the application is if we hear from you. So letters like the ones we've already received that raise specific points and provide specific suggestions are very, very helpful. So I encourage you all, if you have the time and work with Inclusiv, of course, to send in some more public comments on our applications. Again, those are due November 5th. I just want to kind of close out so we can have some time for questions by saying, again, thank you all for the work that you've continued to do. I know a number of credit unions participated in the payroll protection program, as Michelle mentioned. And so that program in and of itself is an example of how community development credit unions were able to shift gears and focus on the sectors of the community and economy that needed short-term emergency impact the most. And it speaks to your flexibility. It speaks to your ability to tune into what your customers and your clients need. And just your overall participation in the CDFI fund programs speaks to your commitment to serve your customers nationwide and provide some of the best, I think, development services and customer services that our folks need in the community. So again, a job well done. I just wanted to highlight the impact that you all have in the CDFI industry and kind of leave on a positive note to say thank you and continue the great work as we try to get through this economic struggle that we're facing and all of the other challenges. So I hope everyone out there is doing well and just continue the great work. Thank you.
Thank you, Jodie, and thank you both for providing such fabulous remarks and really kind of seeing us in our movement. I think the amount to which the awards and the success of CDCUs through the fund in recent years is really exemplary, good example of your leadership and the extent to which I think you do see our movement for what it does and the impact that it has. I'm going to quickly go to a couple of questions. The first question is for Michelle. We've got a question about whether the City Foundation's grants are available for credit unions or only for CDFIs who have the 501c3 designation. That's been a problem in the past sometimes for credit unions, that they have to have a requirement of being affiliated with a 501c3.
Yep, so is my favorite city. I'm still getting up to speed, but from my understanding, through our foundation, our grants do go to 501c3 organizations, but there are different programs that we have that touch CDFIs and connect anyone with our foundation team or a business that are leading that work.
Thank you. And maybe that's an opportunity for ongoing conversation with Inclusiv, since we are a 501c3 and can be as a network, could potentially help credit unions be able to connect in that way. The next question is actually for Jodie. The first is, can you tell us a bit more about the small dollar program and what are the immediate next steps?
Great. So the small dollar loan program, as I mentioned, was appropriated to funds to the CDFI fund in 2020. However, it was established through the Dodd-Frank Act in 2010. So this is an exciting time to have a program that was recognized 10 years ago to finally be funded. There's about 5 million available, so not a large program, but it has a very specific purpose, which is to support CDFIs that offer small dollar loan programs. And the grant awards can be used either for technical assistance or loan loss reserves. Since we're doing it in 2021, if it turns out that the budget is approved or we are under a continuing resolution, we will actually have more funding for the program because we'll have the 2020 year and the 2021 year. So it could be up to 10 million, depending on how the budget process goes. But right now we are working on the application and the notice of funding availability. Over the summer, we issued a request for information and we got some really good feedback from the industry, from some community groups and some community advocacy groups. And so we're using that information to incorporate that into the application process. If everything goes well internally with clearance and publishing the application, we hope to open that in early 2021, I would say, top of the spring, kind of April time-ish. And then we would award those funds by the end of the fiscal year, September 30th. So again, it's very specific, it's very targeted to supporting the growth of small dollar loans across the country.
Great, and I'll just say to everybody on the line, look out for webinars from Inclusiv, because I'm sure as soon as it goes up, we'll want to make sure we do as much as we can to get you well informed on how to access that. The last question I'm going to ask is again for you, Jodie, and that is about data and specifically the transaction level data. There's a concern about privacy of our members, and getting data at the transaction level can potentially expose more of our members' information than they may be comfortable with. Can you speak a little bit to how member data will be protected and what credit unions should do in this circumstance?
So I will say that more guidance on the reporting and the data that we collect will come out, specifically as it relates to certification and our other data collection efforts. We will be putting out more data, more information about that. But I will also say that the government, and particularly Treasury and the CDFI fund, adhere to numerous privacy laws, and we ensure that the data that is collected is treated with the level of security to erase any PII, personal information, and to erase any type of identifiable characteristics or variables that could be tied back to an individual, a business, or a particular entity if we have to use it for any type of public reporting, such as the ACR or other types of data that we're putting out. We would like to, again, and I said this earlier, use the data collection so to paint a robust picture of the CDFI industry. And sometimes that does involve collecting data from CDFIs, but it doesn't mean that we have to share all of that data from CDFIs in a way that would be identifiable. So, rest assured that we have our PII processes and security processes in place, and we will be putting out guidance about security and how to report into us. I will also say, though, if there are very specific issues to credit unions, it would be great to hear from you. I think most of you, and we work with Terry Radigan on other data issues, you know Greg Bishak, our financial strategies and research manager, you know me, Pablo, Cathie, you know how to get in touch with me. But if there are very specific security issues related to community development credit unions, please send them our way and we'll make sure to address those in whatever guidance comes out.
Thank you. I want to thank both Jodie Harris and Michelle Thornhill for joining us today. This has been a fabulous conversation. We're so grateful to have such terrific partners in both of you, in Citi and the CDFI Fund. I am now going to turn it over to, we have a special recorded message from Chairman Rodney Hood of the NCUA. So with that, we'll hear from the chairman.
As we're now approaching our 8th month of the COVID-19 pandemic, I applaud Inclusiv for its continued commitment to financial inclusion for underserved communities during this crisis. Your efforts make a powerful statement about this industry's safety, soundness, and commitment to service. The COVID-19 pandemic has revealed a concerning aspect of American life. Even in an age of relative plenty and prosperity, inequalities continue to plague our nation. Consider the pandemic's disproportionate impact on communities of color. That stems in part from economic opportunity, an area where leaders in the financial services industry can have a powerful impact by making a genuine commitment to a financial inclusion agenda. Here at NCUA, I'm very pleased that we have launched a financial inclusion initiative, Access, advancing communities through credit, education, stability, and support. This initiative will bring together leaders across NCUA to develop policies and programs in support of financial inclusion within the agency and the broader credit union system. Access will build on the earlier successes, including our Second Chance Initiative, Payday Alternative Loan Rule 2, and our MDI Preservation Program to expand and address the financial services, financial education, and employment needs of underserved and diverse communities. At NCUA, we're always looking for ways to foster greater financial inclusion, accessibility, and opportunity for all Americans. That's why today we are updating and expanding our approach when considering military personnel in determining whether a credit union qualifies for the low-income designation. We found that 100% of active military personnel could count towards a credit union's low-income designation status. That means not only expanding access for our men and women in uniform, but also offering benefits for credit unions that carry a low-income designation, including an exemption from the statutory cap or member business lending of 12.25%, eligibility for grants and loans from the Community Development Revolving Loan Fund, the ability to accept deposits from non-members, and the authorization to obtain supplemental capital. I'm indeed pleased with the credit union industry's leadership on this front and look forward to working with you all from Inclusiv and other nonprofit partners in this great effort. It, you all, is truly in the best efforts of people helping people. And it's certainly my goal is to help empower you all to serve our men and women in uniform and other vulnerable, marginalized communities. And with that, I say thank you.
Thank you so much, Chairman Hood. We really appreciate your comments. We at Inclusiv strongly believe that our future and relevance as an industry, as a movement, it's going to be determined by how well we embrace DEI, right? That's our future. And thank you, Jodie and Michelle and Cathie for your wonderful panel. You know, there's a space for everyone here, right? In our work, you know, federal agencies, banks, credit unions, we can all come together. We all can play a role in this conversation. So we really thank you for your commitment and your support. Now I'm gonna move on to some housekeeping items, of course. We have now only 10 minutes intermission. But so feel free to use the time to stretch your legs, you know, grab something to eat, but also make sure that you have save a seat on your for the next session. Yes, you have to go back to our main site, right, the conference portal, and then just click back and choose the session you want to attend. The next session is going to be also a plenary session, so it's not going to be as confusing, but after that, we're going to have breakout sessions. Again, we have around 600 people attending, so we're really happy with this turnover. It's fantastic. We feel like there's an amazing momentum going on, and we thank everyone for participating. So take the next few minutes, you know, to relax and then come back right at 1:30. Remember, this is all Eastern time. If you need any technical support, you can always email us at emsupport@advancednetlabs.org. Again, emsupport@advancednetlabs.org. And with that, we'll leave you for the next few minutes, and we'll see you in 10 minutes again. Thank you so much.